Turning now to new data on the U.S. jobs market, the latest report shows the U.S. added 263,000 new jobs in November. That's up 2,000 from the month before. The unemployment rate remained steady at 3.7%, despite mass layoffs and hiring freezes across several job sectors. For more analysis, let us bring in Javier David. This is his first appearance as a CBS News contributor.
Welcome to the family.
Welcome to the CBS News family. You're also the managing editor of business and markets at Axios. Nice.
Yeah.
I mean, like...
I don't sleep a lot.
Exactly.
Right.
We're happy to have you. So let's talk about this.
Yeah.
What's your take on this latest number, the job market? Because it's something that we've been talking about. Yes, the economy, inflation remains high. I note that gas prices are coming down.
Yes.
They expect them to be below $3 by the end of the year. Mm-hmm. So you have some good indicators of a recovering economy or a strong economy, but then you have inflation and other things that are painful for people at home.
Right. Well, one is playing into the other. You have a very strong jobs market. People are still continuing to earn, which means they're still continuing to spend. Mm-hmm. And that contributes to the demand problem that keeps inflation lifted. So what we got today was payrolls data that was well above expectations, 263,000. The unemployment rate is still well below 4%. This is not a job market that is behaving in any way, shape, or form recessionary or seems as if it's responding to a Federal Reserve campaign to tighten interest rates.
So can I just ask, Emery, before you jump in, it's something that I was talking with a friend of mine who's a source at JP Morgan, and he said, you know, the problem with CEOs is that they are very myopic. They are only looking ahead to the next quarter or the next 2 quarters because we're talking about mass layoffs that have been happening across several industries, but we know that in 6 months or a year, those same CEOs are going to be saying, hey, we're hiring.
Right, exactly. And the layoffs that we're talking about are, let's be kind of contextualize it. They're concentrated primarily in the tech sector.
Right.
The tech sector overall, as a percentage of the overall employment, is less than 1%. It's not even that meaningful. And what also is happening in the jobs market is so strong that people are leaving one job. As they're getting laid off, they're walking right into another position somewhere else.
Yeah, and with the tech sector, what you're hearing over and over again is we hired too much during the pandemic, and now we're correcting. Not so much, you know, revenues are tanking or whatever. But of course, every time we get one of these reports, we look to the Fed. Is this something that the Federal Reserve is going to like or not like? So we heard already, or there's been an indication that the next rate increase will be at least lower than the previous ones. But is the Fed going to like this?
That's the pivot that everyone is hoping for and sort of wishing and praying for. The reality of it is the Fed is preparing the groundwork to slow its rate hikes, but not eliminate them and certainly not cut them. Yeah. So we may see in a couple of weeks when they meet again, 0.5 percentage point hike. But based on these numbers, which I don't think they're going to view favorably because it does really seems to suggest that there's too much strength and there's way too much tightness in the labor market.
So you mentioned, Javier, the tech sector, but there have been layoffs, including in media. We've been talking about that a lot this week. It's quiet quitting that's also sort of in play here.
Is that still a thing?
Is that a thing, or is the Great Resignation?
It kind of depends on who you ask.
Yeah. And in media, is that also kind of connected to tech? Because it seems like it has a lot to do with streaming.
Very, very much so. Because
wait, so you think it is connected to tech?
Well, it is connected to tech because we are dependent on digital ad revenue. So people that
so digital ad revenue, they're not spending as much.
It's like they're just not spending as much on that, and I think that's the sort of thing that makes everyone nervous. And media, because most people don't actually charge for their website. Some do, like you have the New York Times. If you have a certain brand or a certain cachet, people are subscribers. But by and large, people aren't spending as much on digital ad revenues, and that kind of upsets the apple cart.
But it also sort of seems like with streaming, the same thing that happened to other tech platforms, which is during the pandemic, there was a ramping up of a customer base, and so they ramped up. And it seems like that's also happening with streaming. There was a ramping up. We were all sitting on the couch, binging whatever we could binge, and now we're out and about.
It just turned out that the whole pandemic effect was not as lasting as a lot of people thought it would be. And now the market and business conditions are overcorrecting for what was effectively an overcorrection. People spending too much on certain sectors of the economy or certain types of positions with the expectation that everybody was going to be sitting on our couches forever, and that's not the case.
So real quickly, in 20
One
seconds,
can dream.
Javier, is it your assertion based on your analysis that for the people that are talking about how bad the pandemic, the lockdowns were for the economy, it's proving not to have been the case.
It's not. I mean, for that very brief period in time in 2020, which was all of 2-3 months, maybe, that it was catastrophic for the economy. But because we had so much spending, like it wasn't even just the Federal Reserve and monetary policy, it was government policy. We had PPP and we had enhanced unemployment benefits and stimulus checks and all of this stuff. It created a sort of groundswell of demand. So once the economy reopened, people had more money in their pockets. Companies had to rehire. There was this whole pandemic effect of people working from home, companies spending and presuming that a lot of the behaviors that we developed during the pandemic would last, at least for another several years. And that's proving to be not the case. But the one thing that has persisted is people have more money and they're willing to spend.
Yep. And so inflation persists.
That's right.
Javier, thank you very much.
You,
and once
Javier.
again, welcome.
Sure. Thank you.